In this video, I'm going to break down exactly how and why I knew it was a good buy. There were several indicators that led me to believe that this stock was severely undervalued and made me extremely confident that it would go up, if not immediately, at least over the next few months. First and foremost was the inside idea that they're investing a lot into marketplace and shops to compete with Amazon, eBay, and the likes of other e-commerce platforms. The reason I knew this was because I dropship on Facebook Marketplace and Facebook Shops every single day, and I have for the past 2 years roughly. And so I've seen them in real time invest heavily into upgrading this platform and attempting to compete with these other e-commerce sites. When they do finally get this fully off the ground, they'll be making 5% on every single transaction on the platform, which is why I knew it would be a large influx of revenue for this company. Second, with Q4 spending, the new year beginning, and lots of companies wanting to start the year strong, I knew there was going to be a lot more spent on ads. Yes, TikTok has certainly taken the lion's share of company advertising recently, but it's starting to level out more and more. And Facebook and Instagram stood to benefit a lot from that. Plus, the market as a whole was significantly down a lot on them. If you took a look at their current stock price and what the potential was from the past year or even the past 5-year span, there was a lot of room for improvement. Now, this is not a great indicator, okay? It's not a great indicator of a good stock buy, obviously, but it does show that their stock price had a lot of room for growth and it had been way up before. The third reason is Meta's been going seriously heavy into AI and AI gaming with things like MetaQuest, which is clearly going to be huge. And there's a large opportunity here for growth in the coming years. And this company will have a big role to play in that. For this reason, I still think at this current time, the stock is a great long-term buy. But if none of those first three things mattered, the fourth reason is the strongest on why I knew they were a great buy, and that's the balance sheet. Meta's balance sheet was very strong with large differences in assets and liabilities. Basically, that meant that not only could they afford to continue to spend on R&D to expand and be a leader in whatever sectors they chose, and we've already obviously covered e-commerce and AI gaming as two examples of that, but it also meant that they could afford to acquire companies that might have posed a competitive threat or even strategically acquire companies that might already be a step ahead of them in certain sectors. Most importantly, it also indicated to me that even if we went into a recession in the coming years, Meta as a company would be able to withstand it extremely well, simply because they had enough positive cash flow to stay afloat and weather any major storms. Not to mention, in a recession, companies and other assets can be purchased for pennies on the dollar, and Meta, as you can see from their balance sheet, has a lot of excess dollars. Again, I'm no expert in the stock market, but in my opinion, as someone who runs a small company, the balance sheet is one of the most important things that I look at before investing into any company, especially long term. Now, all these things indicated that Meta was extremely undervalued. The stock would go up significantly over time, and it was a great long-term buy. But when I got in at $113 and $133 per share, respectively, on each platform, and the stock then hit $197, I decided to sell it and realize my profits, which was just under $6,500. I never planned to sell this early. I actually plan to invest for the long haul. But since there's definitely uncertainty in the market at the current moment, I thought it was probably smarter to just realize some profit, and ultimately I'll just put some excess money into safer investments, as well as hold on to some cash if I see some other good opportunities come up. Also, I want to hit home that I do not recommend trying to time the market. I also don't personally recommend trading. I know there's certainly a lot of other people out there that have consistent success doing that, but the chances are you and me are not one of those people. If you want to lose money, then that's certainly the way to go. If you don't want to lose money and you want to make money consistently and get wealthy guaranteed, then this is what you should do. Make sure that you have a retirement account set up, either a Roth IRA or a SEP IRA if you own the company and you pay yourself as an employee, or make sure you're putting money into a 401k if you're an employee, especially if your company has a match program. Then either invest your money into proven index funds like VU or VTI are two popular ones, or anything like that, or split your investing in between index funds with specific sectors like real estate, emerging markets, long-term bonds, consumer staples, healthcare, and energy, along with some other popular ones like VU, VTI, or global funds. Doing this will protect your money long-term because the stock market has averaged almost 11% since its inception, so you can realistically expect 11% compounded yearly, assuming, of course, that you can afford to wait long-term. Plus, you'll be protected because because you're splitting your investments between sectors, like I said, because typically speaking, even in a recession, when one or few of those sectors goes down, the others tend to benefit from that and vice versa. Also, remember, this is just my strategy. I've been kind of studying this in the background simply because I've been interested for the past few years now. And in my opinion, it's a lot simpler than most people make it out to be. Just invest into proven index funds that have gone up over time and then leave your money in them. Don't touch it. If you're unsure about any of this, the simplest thing you can do and the smartest thing that you can do is just to consult a professional and give your money to a professional to invest for you. Finally, I personally don't recommend trying to make money in the stock market, trading, or anything like that. I think ultimately that catches up with most people. Plus, I'm a big proponent of only playing games where the odds are stacked in your favor and where you have some influence over the outcome. And you have zero influence over the outcome in single stocks or crypto, for example, if you're most people. However, you have a lot of ability to influence the outcome when you start your own business. That's why I spend all my effort trying to make money in my business and taking calculated risks there, where I know I have a better chance of success and a high ROI. And there's so much e-commerce advice on this channel that can help you start your own business and get it up and running fast. So if you're interested, check it out. It's all there for free.